Did you know China just moved $8 trillion? 8 trillion. That's an amount larger than the entire economy of Japan or Germany. It's bigger than the GDP of many regions combined. And they didn't do it with big announcements or dramatic headlines. They moved it quietly, strategically. And if you know your history, you know a move this big is never random. What makes this so unsettling isn't just the amount of money, it's the pattern. Because this exact same sequence has played out before. Different countries, different centuries, but the same structure, the same 4 stages, the same rising tension between a new power and an established one. Over the last few years, China has restructured trillions of dollars in foreign reserves, overseas assets, supply chains, and trade relationships. On the surface, it looks like normal economic activity. Countries rebalance their portfolios all the time. But when you zoom out and look at the sequence, a very different picture emerges. There's a 4-stage pattern that often appears when one economic power starts to challenge another. Stage 1 is deep interdependence. 2 major economies become tightly connected. Trade explodes, investments cross borders, and supply chains become intertwined. Everyone profits. Politicians talk about cooperation. And economists tell us that conflict is irrational in a globalized world. The belief is that economic ties make confrontation impossible. History shows us that this belief is often far too optimistic. Stage 2 is uneven accumulation. One side starts quietly strengthening its position. It builds up reserves, increases its industrial power, and reduces its vulnerabilities. The other side keeps consuming, borrowing, and assuming the system will stay stable forever. The shift is slow and subtle, but over time, one side gains leverage. Stage 3 is strategic repositioning. The rising power starts creating alternatives. Alternative payment systems, alternative trade routes, alternative financial networks. It diversifies away from any dependency that could be used against it. These moves are rarely framed as hostile. They're called resilience, modernization, or reform. Publicly, cooperation continues. Privately, preparations accelerate. Stage 4 is open confrontation, whether it's economic or something more. This is where we see sanctions, asset freezes, currency shocks, and trade restrictions. The dependency that was built in Stage 1 becomes the weapon used in Stage 4. Now, this framework doesn't mean collapse is guaranteed or that war is inevitable, but it does show that economic relationships can flip from mutual benefit to strategic pressure much faster than most people expect. Think about Britain and Germany before World War I. Britain was the world's dominant power. The pound was the reserve currency. London was the center of finance. Germany was the rising industrial challenger. Trade between them was massive. Many believed their economic interdependence made a major war impossible. But behind the scenes, Germany was increasing its gold reserves and strengthening its domestic industries. When the war broke out in 1914, the financial system that seemed so permanent shattered almost overnight. Or look at Europe's energy relationship with Russia. For years, European economies grew dependent on Russian natural gas. Meanwhile, Russia was building up its foreign reserves, buying gold, and developing alternatives to Western payment systems. When the conflict in Ukraine escalated in 2022, the West hit Russia with massive sanctions. Russian reserves were frozen, banks were cut off from the SWIFT system, and energy markets were thrown into chaos. The dependency that once seemed like a simple business relationship became a powerful tool of economic warfare. So, let's return to China. China holds one of the largest pools of foreign exchange reserves in the world. It's expanding trade through its Belt and Road Initiative. It's been buying up gold. It's actively exploring alternatives to the dollar-based financial system, strengthening trade with partners across Asia, Africa, and Latin America. At the same time, Western economies are still deeply intertwined with Chinese manufacturing. Consumers depend on affordable goods, corporations depend on Chinese factories, and financial markets depend on global capital flows. So, are we in Stage 3? Some analysts say yes. Others argue this is just smart diversification in a risky world. The truth is, global economics is never simple. Patterns give us warnings, not certainties. There are stories floating around about an inevitable economic demolition, maybe even with a deadline like 2026. This idea feels powerful because it connects history, leverage, and conflict into a clean, easy-to-understand storyline. But when we look closer, the picture gets a lot more complicated. First off, let's be clear. Economic warfare is almost never one-sided, especially when 2 economies are as linked as the US and China. If China were to suddenly sell off all its US assets, say hundreds of billions of dollars in treasury bonds, it would severely damage its own remaining holdings. It would also cause the yuan to strengthen, which would hurt China's exports, the very engine of its economy. The US Treasury market is over $25 trillion. It's vast. While a huge sell-off would cause disruption, it's not a simple knockout blow. In reality, China has been gradually reducing its holdings for years without causing a collapse. An aggressive, sudden move would hurt China just as much, if not more. Second, China's economic power is also a vulnerability. Yes, it dominates manufacturing, but its economy relies heavily on exports, and the US and Europe are still its biggest customers. If China were to abruptly cut off those exports, it would trigger factory shutdowns and mass unemployment at home. That creates social instability, which is the one thing the Chinese government fears most. Economic leverage is most effective when it's a threat, not when it's actually used in a way that causes mutual destruction. Third, a shift in the world's reserve currency takes decades, not years. The British pound didn't disappear overnight after World War I. The US dollar took decades, 2 world wars, and huge structural changes to become dominant. Today, over half of all global reserves are still held in US dollars. Most international trade is still priced in dollars. The US financial system is the deepest and most liquid in the world. China's yuan, while growing, still makes up a tiny fraction of global reserves. Its capital controls prevent it from being freely exchanged, which is a huge barrier to it becoming a true global currency. So what about these claims of a secret 2026 deadline for a total divestment from the West? There's no verified public policy to support this. If a coordinated divestment of $8 trillion were truly happening, we wouldn't have to guess. It would be impossible to hide in global financial markets. We would see the shockwaves everywhere. These narratives of an inevitable collapse are popular because they're simple. They offer a clear villain, a predictable timeline, and a sense of urgency. But the real world is messy. It's a complex network of incentives, feedback loops, and political calculations. So what is actually happening? We are seeing a gradual restructuring of the global economy. Companies are diversifying their supply chains with China plus one strategies. Geopolitical tensions are leading to stronger regional trade blocs. Central banks are buying more gold as a hedge. The era of rapid globalization is slowing down. This isn't a sudden demolition, it's a slow, grinding shift. So instead of preparing for a specific doomsday in 2026, it's wiser to understand these broader trends. Think about diversification in your own life and investments. The world is changing, but it's not following a simple 4-act play. The quiet movement of trillions of dollars is a sign of preparation for a more fractured and competitive world, not necessarily a sign of an impending coordinated collapse. It's a story of strategic repositioning, and it's one we all need to be watching closely. Thanks for watching. If you found this analysis helpful, be sure to like this video and subscribe for more deep dives into the forces shaping our world. See you next time.